A college student put $100 into an investment app 2 years ago and forgot about it. Last month she checked and it had grown to $287. She didn't watch the market, didn't stress about prices, just let it grow. Her roommate kept that same $100 in savings, and it's still basically $100. Investing sounds scary, but it's simpler than you think. Today I'm showing you the easiest way to start, even with just $100. What if that money sitting idle could actually be working for you? Let me show you exactly how. Step 1. Why starting small? Actually matters. Most people think you need thousands to invest. That's wrong, and it stops people from ever starting. Invest $100 today in a basic index fund, averaging 8% returns. In 10 years, that becomes around $215 without adding anything. Now add just $50 monthly. In 10 years, you'd have $9,200. In 20 years, over $29,000. That's compound interest working. My brother started investing $75 monthly at 22. He's 28 now with over $18,000 invested. Some months the market drops and he worries. Other months it rises. But overall, his money grew way more than sitting in a bank earning nothing. The biggest mistake is waiting until you have more money. Starting with $100 today beats starting with $1,000 5 years from now because time matters most in investing. That $100 in your account stays $100 next year or becomes $108 if invested, then $117, then $126. It builds on itself. Starting small still matters hugely. Step 2. Picking your app and opening an account. You need somewhere to invest. The easiest way is phone apps, way simpler than traditional brokers. The best beginner apps are Robinhood, Fidelity, and Webull, all free. No monthly fees, no trading fees. Download the app, connect your bank, and start investing. Robinhood is simplest with a clean interface, perfect for complete beginners. Fidelity has great educational content. Webull is in between. Pick whichever feels easiest to you. You'll choose an account type. For beginners, get a standard brokerage account, regular investing account. Put money in, take it out whenever. No complicated rules. There's also Roth IRA for retirement. Can't touch money until 59 without penalties, but you never pay taxes on growth. If you can lock money away long term, Roth IRA is amazing. If you might need it sooner, stick with regular brokerage. Setup takes 10 minutes. Basic info, social security number, bank details. Usually approved same day. Transfer money and start investing immediately. Step 3. What to actually invest in. This overwhelms people. Thousands of options. But for beginners with small amounts, the answer is simple. Index funds. An index fund holds tiny pieces of hundreds of companies. Instead of buying one stock hoping it succeeds, you buy a piece of everything. If the overall market grows, you grow. The most popular index funds track the S&P 500, the 500 biggest US companies. Apple, Microsoft, Amazon, Google, Tesla, all mixed together. Buy an S&P 500 fund and you own a tiny piece of all 500. The 3 best for beginners are VOO, SPY, and IVV. All track the S&P 500, almost identical. Pick anyone, doesn't matter which. You have $100. Open Robinhood, search VOO, click buy, enter $100. Done. You own a piece of 500 major companies. you're officially investing. Some want to pick individual stocks because it's exciting, but most professional investors can't beat simple index funds long term. And they do this with research teams. You won't outsmart them picking random stocks. Index funds are boring, but boring wins. The S&P 500 averaged around 10% annual returns over decades. Some years up 20%, some down 10%, but over long periods, it consistently grows. Step 4, the buy and hold strategy. Most important part, most beginners mess this up. Investing isn't buying and selling constantly. It's buying and holding for years. When you invest $100, the value changes daily. Some days 102, some days 98. This is completely normal. Ignore it. My friend panicked during a market dip. His $500 investment dropped to $430. He got scared and sold, locking in a $70 loss. 3 months later, the market recovered to $520. He lost money by panicking. The market has ups and downs. Over days and weeks, it's unpredictable. But over years and decades, it trends upward. Every major crash in history eventually recovered and went higher. People who stayed invested made money. People who panicked lost money. The strategy is simple. Invest money you won't need for at least 5 years. Check maybe once a month. Don't obsess over daily changes. Definitely don't sell when markets drop. Market drops are actually buying opportunities. Prices are down, so your money buys more shares. When markets recover, you benefit more. Adding money consistently, like $50 or $100 monthly, works amazing because you buy at different prices over time. Step 5. Make it automatic and stay consistent. The easiest way to build wealth is making it automatic so you don't think about it. Most apps let you set up automatic transfers. Connect your bank and tell the app to automatically invest $50 weekly or $100 monthly, whatever fits your budget. The app takes the money and invests it automatically. This is powerful because you stop thinking about it. Money gets invested before you spend it elsewhere. It becomes like a bill that just happens, except this bill builds your wealth. My cousin set up automatic investments of $75 twice monthly from his paychecks. That's $150 monthly. After 18 months, he has over $3,100 invested. About $400 is pure market growth. He barely thinks about it now. It just happens. Even just $25 weekly is $1,300 yearly getting invested. Do that 5 years and you'll have over $7,000, probably closer to $8,000 with growth. Real money from small weekly amounts. Consistency over time beats large one-time amounts. Someone investing $50 monthly for 10 years ends up with way more than someone investing $1,000 once and stopping. Start with whatever you can actually afford, even $20 monthly. Get the habit going. As you earn more over time, increase the amount. The important thing is starting now and staying consistent. That's the complete process. 10 years from now, you'll either wish you started today or be grateful you did. The difference is taking action this week. Your first $100 invested beats $1,000 of planning that never happens. If this made investing feel less scary and more doable, go ahead and like this video. Subscribe for more straightforward money content that cuts through the confusion. Tell me in the comments if you're starting this week or what's holding you back.